profit will take care of itself. The system does not allow over trading, and mainly it uses options. This method of trading has been devised after extensive statistical study on the price action of Nifty over a 4-year period, and I have actually used it in the market. Okay, so you don't need a computer, you don't need charts, you don't need indicators, you don't need the daily levels. All you need is the high, low and close of the Nifty on the spot, which you get in any newspaper or on the TV also. And you need the weekly high, low, close. You need just a calculator. It's very easy and simple rules to follow. You don't have one more thing. This system I designed for myself because I wanted to trade without sitting in front of the TV, because I am busy in the hospital. So I have designed this system in such a way, and I recommend all the people who trade should not be sitting in front of the TV. If you sit in the front of the TV, you are likely to overtrade and only make money for the broker. You will not make any money. So I recommend that actually you don't sit in front of the TV. Okay? You can trade through a broker by mobile while you are doing some other work. Okay? In day trading, you have to be out of the market at the end of the day. You should not be carrying your position to the next day. Simple. Short-term trading is anything between Monday to Friday for 1 week or slightly longer. It is also called swing trade. Swing trade. Investing is a longer time frame, and investing in our country is only one direction, up. You are not allowed to sell a stock if you feel the stock will come down, other than during the day. You cannot carry a short sell. That means if I feel Reliance will fall, I can't sell Reliance in the cash market and carry the position to the next day. I am not allowed to do that. I can buy Reliance and carry the position, but I can't sell Reliance in cash. If I have to sell Reliance, I have to sell it only in the derivative market. That means I can sell a future of Reliance, but I can't sell Reliance in the cash market if I don't own Reliance already. I can only sell those shares which I own in my Demat account. Okay? Position where if you feel the market is going to come down, you cannot trade, you cannot invest, you cannot take that position. It's not allowed. Beyond 1 week, that means morning to evening, you cannot carry the position. Whereas in trading, you can do both. You can profit from market going up, you can profit from market coming down, because you are allowed to do both. Okay? So trading and investing, short-term trading and day trading. People use it by like fundamental analysis and looking at balance sheets and things like that. But what I have told you today, earlier, the stocks which I told you, is purely on technicals. Nothing fundamental. I don't know what Reliance Capital does. I don't know what Bosch does. I don't care. What I have seen on the chart I am told. To make money. Do we need 10 stocks to make money? No. Nifty is diversified. It's a market capitalization weighted index of 50 stocks. So when you buy Nifty, actually what are you doing? Buying or selling? You are buying 50 or selling 50 stocks. So it's diversified. Second thing is, since I am telling that my system uses options, okay, options. Individual stock options are not very liquid. You know what is liquid? You know what is liquidity? Huh? No, that is one measure. Liquidity in stock market. What is the meaning of liquidity in stock market? Correct. Basically, you can buy and sell with minimum what is known as impact cost. You know what is impact cost? Suppose I want to buy Reliance at 900 rupees. I want to buy Reliance at 900 rupees. Now, as I told you that the stock market is like an online auction. Buyers, sellers. Now, if I want to buy Reliance at 900, but there is nobody selling at 900, the seller is only available at 905. Okay, I can do two things. One, I can feed. Okay, I want to buy at 900, or I can buy at 905. Correct? If I feed at 900, chances are that I may get a seller at 900 rupees after some time, or Reliance may go up and then I may be forced to buy at 910. So I have to take a decision at that time whether I am comfortable buying 905 instead of 900. If I do that, the difference of 5 rupees, that means the intended price that you wanted to buy and the actual price that you bought is the impact cost. You did not recognize that you thought, okay, I want to buy at 900, so I will get it at 900. But did you get it at 900? No. You got it at 905. So 5 rupees on 900 is the percentage of the impact cost. So if you were to divide it, so 500 upon 900 would be somewhere around 5% or 0.5%. What is it? 0.6%. So the impact cost comes to around 0.6%. Have you understood this? Now, the more illiquid the stock, the more is the impact cost. The more is the impact cost. Now, I used to trade MRF. It's a 40,000 ka stock. The impact cost is on even on futures. Okay, options. Option to milta hi nahi hai. There will be like 500 rupees ka difference between buyer and seller. Even to buy one lot of MRF, the impact cost is to be 100 rupees. If you want to buy 40,000, you will get it at 40,100. You will not get it at 40,000. Buyer seller ka difference is 100 rupees. So the more illiquid, the more is the impact cost. Nifty being the maximum traded, okay, impact cost is minimum because it is liquid. So you can get options at very less difference between your intended price and this. So price are the buyer seller at very near 1 rupee, 2 rupee difference only. Okay, that is one. So it only has to go up for you to make money. Nifty may go up, Reliance may come down. So in spite of Nifty going up, you will lose money. Whereas if you trade Nifty, whatever goes up or down indirectly will affect the Nifty. So the Nifty will move whichever way, whether Reliance moves up or down, Nifty will move in its own way. So therefore, by trading Nifty, you are automatically diversifying your risk. So the risk gets diversified, it is liquid and it represents the maximum market participants. That means whichever stock you buy in the stock market, indirectly it will affect the Nifty, correct? So, technical analysis, what we discussed in the beginning of my talk, depends upon the maximum market participants. The more the market participants trade a particular asset like Nifty or whatever it is, the better will be the, or more accurate will be the charts. Because ultimately what are charts? They reflect the mass psychology, correct? So more people trade a particular instrument, the more will be the accuracy of the technical charts. So for these three reasons, liquidity, diversification and accuracy of technical charts, it's best to trade only Nifty. Also, if you are doing some other work, instead of seeing 10 stocks ka charts, all you need to do is see the Nifty. It's preparing for the trading also is easy. 45,000 in 1 year trading my system. Okay. Actually, out of this 45,000, I recommend that on a trade you should only use 15,000 rupees. That means if you have got 45,000 to invest, you should not use the entire 45,000 on one trade. Money management rule says you should use only 1/3 the capital for one trade. So one trade would be 1,500. And my system will generate somewhere around 5 to 6 trades in a month only. So though it's a day trading Nifty, you will not be trading every day. The rules will allow you to trade only 5 or 6 times. And because of 86% accuracy, out of these 6 trades, if one trade goes wrong, it cancels the profit made by one trade. So with 4 trades only, profitable trades, you may be able to convert 45,000 to 1,35,000 at the end of 1 year. Because of consistency of trading.